And clearly, the global stock markets are reeling under the heat of trade wars. U.S. markets yesterday opened on a low as China imposed retaliatory tariffs on $60 billion of U.S. imports. The tariffs will come into effect on June 1st. The tariffs on some products will be 25%, while on some it will be 20%. The rates will rise from earlier 10 and 5%. There are even fears of recession as the trade war between world's two biggest economies escalate. The tariffs would affect the U.S. agriculture sector as well. Earlier, in a series of tweets, Trump warned China of dire consequences if Beijing tried to introduce countermeasures. Trump also said Beijing should have accepted the trade deal proposed by Washington. Meanwhile, the U.S. warnings seemed to have no effect on China, which went ahead with another round of tit-for-tat tariffs. Remember, last week's trade talks between Beijing and Washington were overshadowed by Trump's decision to impose 25% tariffs on $200 billion worth of Chinese imports. Meanwhile, President Trump is facing opposition from his own party members over trade war with China.
The great benefits of the tax cut, which have low unemployment and incredible economic growth, could be erased by this tariff war. As we ratchet it up with China, I'm very concerned. However, we're in the middle of this, and the president is playing a negotiating battle with the Chinese, and I think he feels that at this point they can't really back out. I think there are ways the Chinese market could open up, and that would be good, but I still have advised the administration, get this done, because the longer we're involved in a tariff battle or a trade war, the better chance there is that we could actually enter into a recession because of it.
Notably, the White House had earlier said U.S. President Trump will likely be meeting his Chinese counterpart Xi Jinping at the G20 summit in Japan at the end of next month. And Wall Street shares sank yesterday as China announced retaliatory tariffs. The U.S. stock market suffered its worst day since the start of 2019. In fact, the Dow Jones Industrial Average fell 2.38%. The sell-off came after China announced it will impose new tariffs on $60 billion of U.S. imports from June 1st. Now, several investors have been surprised by Beijing's response. Among stocks particularly vulnerable to U.S.-China tariffs, Boeing slid 4.9% and Caterpillar, it fell 4.6%. Meanwhile, Apple shares, they sank 5.8% on double whammy of heightened trade tensions and an unfavorable court decision. The sell-off was also sparked by fears that world's two largest economies are spiraling into a no-hold-barred dispute that could derail global economy.